Hey traders, in this video I'm gonna talk about the psychology of market cycle. So every chart I believe goes through this phase where you know because trading is all about um, own psychology, trader psychology, collective trader psychology. So it is basically the price action is basically reflected on the price. So what is happening in their collective mind is being printed out on the chart. So here first we will look at this very good infographic from Wall's cheat sheet. So here it says at the bottom here it says disbelief. This rally will fail like the others. So it say him saying that this will never go up back. And then what tends to happen is the market slowly trends higher and higher. And then there is a group that will say that those people who are in disbelief, they will have some kind of hope that I think this recovery is possible. They will think it in such a way where they will still not take any action, and then they will look for some kind of validation or some kind of thing to say that okay, this is actually something is maybe I should go into it or what. So that what tends to happen is market will slowly go higher and higher to the point where they will have this feeling of saying that this rally is real, and then they will start to believe time to get fully invested. So at this stage are those people who will be entering the market, those who were in disbelief and they were in hope. They wouldn't be taking a trade here, they will be taking at the trade at this point, beyond this point where they will start to believe. Then they will take a trade at the top, and they will have some kind of thrill. I'll buy more on margin. They will use leverage. They will go on Binance futures, or go on forex, or take on margin and go more than what they can afford to lose. And then they're gonna tell everyone they know that I'm getting into this trade, I'm gonna make so much of money. And then when the peak reach, this is when they will think I am a genius, we're all gonna be rich. But the next second that happened, those people who were the smart ones who bought when the price was cheap is currently selling it off at the top. And that is when you will see a sudden push down. And at this point is where they will have some kind of complacency, where they will think, I think this is just a cooling down period. Market is just retracing. We just need to cool off for the next rally. They will tend to have some kind of vested thing into the chart, saying that they will know that this will be going up back. And then what tends to happen is market will slowly drop to a point where they will start getting anxiety. Those people who take trades at the top, they'll be getting margin call, and then they will think the dip is taking longer than expected. They will be in denial. They will say things like I my investments are with very good, like Bitcoin or with Amazon or with Apple or with Tesla, things like that. They will have that belief that it might come back. And then once that push down even lower than where it was previously, that's where the panic sits. They will start to say, shit, everyone is selling, I better get out. And that's where you have capitulation, where they'll say I'm getting it out, because they are getting like a mental torture as the price is just going lower and lower, and their investments are going into the pennies. So they will say I can't afford to lose more. And then when they drop, they will be in anger. They will go on social media, they will say, they will be ranting out, who shorted the market, why did the government allow this to happen, all sorts of negative things will happen. And Then market will start to go into accumulation phase, where those people who are buying here will be looking at the chart and buying back, because they know this is all in a cycle. And once this happen, they will take some time to accumulate. They is not like, accumulate for a while and then starts to shoot up back. They will take some time, get a better discount. And those people who are going through the phase, they will feel depression. They will be thinking, my retirement money is lost, how can we pay back, I'm an idiot. And then what tends to happen is market will slowly come back again, and same thing comes back to the disbelief. So it all comes back once again, and they will get into the trap again and again and again and again. So this actually, I found this in this Apple chart. So we will look at multiple different pairs, asset class, and see how it all looks in a real life scenario. So here, if we look from this point to this point, so at this point when the market is dropping, they will have disbelief. They will think, how can the market suddenly drop? And you see, it's the same thing. Market slowly go up and suddenly push higher, and market is trending up. A lot of people maybe get into the trade here, and then sudden push down, and then market never were to recover. And this is where this phase is. We just need to cool off for the next rally. So a lot of people will think, I think market will come down and push back up, and then you see big huge candles just dropping even lower than the area. So this is where things like anxiety, denial, panic, capitulation, anger, depression happens. This happens, and then market goes back up. So it's all, if you look at it, it's all like a cycle, and then price comes back up again. So let's look at, let's say, Bitcoin. So I'll remove the drawing, we go to daily chart. Okay, so this is a more clear one, where we look from here. So you see at this point, market started to go up and up and up, and this is where the euphoria stage comes in, where a lot of people that I personally know have bought at the top here. A lot of people I know have bought here, and when I ask them, what's your position on Bitcoin back on 2017, they mentioned that they bought at the top. And when the price were at the bottom here during this time, most of them, I could say around 80% to 70 to 80% have sold here, and rest of them have sold at this point. So you see how the market comes down and starts accumulating, and then even drop even further. This is where the denial, anger, depression all comes in, because imagine you would have bought at 19th of, let's say, 19-20 December 2017, and market is still, 2 years later, it still is around this area. It is so low. So a lot of people face that kind of anger, depression, and then what happens is market slowly gave them like a sucker rally, and then does the same thing back again. And this is like a real flash, resetting every position. Those people who have taken longs with futures, leverage, all those people are out of the market, and then price went up. Then the same cycle happens. At this point, people are in disbelief. People are, they start to believe slowly, optimism, the thrill, and then the euphoria stage, and then price drops. Same thing, this is what we saw in 2022. At this point, I personally have seen so much of people on social media saying that, I think price is going to go to 1000, so much of negativity. But once this happened, this small rally happened, that is where the whole momentum shift. And when this small pullback happened, the same negativity came back. So it's all the same scenarios, where because we are all human beings, we all have some kind of emotions vested into this kind of, because money is involved, so we tend to have more higher degree of emotions in this kind of scenarios. So when things like this happen, markets suddenly push up, ranges for what this is from 23rd June up to 11th August. So it's close to 1 2 3 months it has been in that same range, and then suddenly drop. A lot of people would have given up and closed their position here, and then when they saw this happen, a lot of people would have entered here, and market drop even lower. They would have felt so angry and so like I can't believe it myself buying at this top when I know market is dropping, things like that. And then when this happened, they would have anticipated that market would have gone lower, and what the next thing market went rally up to 60-70,000 to all-time highs. And then same thing, this was like a accumulation phase before they reach to the next all-time high, which is 109. So we need to keep this in consideration to know that market will always be in a phase where no matter what you think, you have to know what you are doing. You can't be simply looking at the chart and saying that I feel market is going to follow my lines, my support or resistance. No, because it's not only one person doing this. There are collective millions of traders buying and selling and doing all those things. So if the price never did reject or never did respect this line, because it is how it is, we don't look at it as a certainty. A lot of people I see fail in this trading is because they look at trading where if they learn something saying that this resistance now becomes support, they will take it with a full grain of salt, saying that this must happen, if not this strategy is stupid, or the guy is a scam. But all this is a game of probability. So we can just take trades, take entries, look for entries based on probability. Like currently, what is the probability of it to continue lower, or what is the probability for it to come up back? So it's all a game of probability we look at. Okay, so let's look at maybe we look at forex charts. So forex charts, maybe not so much, but still the same thing, where forex charts are more stable. It's more, not to say movements like Bitcoin suddenly going up 10,000%, not like that. It's more stable. Stocks and cryptocurrency has a very good effect on this this thing, psychology of market cycle, where you see, let's try to look for something. Maybe we can see it from a small part of it, but the most easiest to look at is, I feel, the stock market and also cryptocurrency, because that's where a lot of traders are invested heavily, like retail traders. Because you see, in forex, a lot of people are out of the market very quick, because they either take on too much of volume and then get kicked out and at a very, very small levels, or they are only trading very small volume that they don't have much toll on their emotions. But stock market is a different story, where stock market is like, see this one, same thing, despair, then belief, and then optimism, and then thrill, euphoria, and then drop. So stock market has a greater effect on this. So please do take this into consideration when you're looking at chart, when you're looking at putting in your hard-earned money into this, because I have myself have gone through those phase where I learned not to be buying at the top when everyone is talking about it. You don't want to be missed out of the trade. That is what they call as FOMO. This is fear of missing out. So basically this means that when the market is rallying, you don't want to be out and later on saying that I could have been inside. So you will have this kind of fear that I should be in the market right now, so you will be buying. But ended up, what tends to happen is you'll be buying at the top because it will be too late. Whenever we are looking at the chart and it's like this, it's not that attractive to us. So that's why you need to have proper planning. You need to have a proper set of rules that, okay, what kind of position would I take and where should I take the position. These are all plans beforehand you need to think of before going into this game. Because when the market is when market is already at the top and you want to get in, your risk reward is very small. Imagine you would have bought at around this area, not to say exactly at this point, let's say around this area, you still have a better risk reward than those people buying at this area or this area. So I hope you get this point where don't rush into trading. There is always another day to trade. And keep in mind one thing, trading is a game only when you have your capital. So when you're out of capital, that means you're out of the game. You're no more participating in this game. You can just look and then contemplate all the things that could have happened. So you should always be aware of this. Don't go and look at some YouTube channel or saying that I can promise you 5,000% in 2 hours and then try to implement that strategy. Guys, think about it. If someone were to have a 5,000% strategy, would they even share to you? I doubt they would share to you, because there is no such thing as 5,000% strategy in 2 hours. All they're doing is just to get you click to their videos and see what kind of nonsense they are talking about. I'm giving you the real views and no any like how to say, not any fake things happening. This is all real things happening, where I personally are doing trading in forex, US stocks, Malaysia stocks, and cryptocurrency myself. So I personally have gone through that stress of missing out on trades, having not enough capital to invest when the market is going up, things like that. So these are the lessons that I've learned. I have been in situations where I don't have capital because I was getting out of the position so fast because I was greedy. So another great thing is greed. When you see your friends making money, you want to be buying at the same point, and you will put everything you own just to get that 1% or 2% or 3%, but ended up you lose 30-40%. And if you done that 2 3 4 times, eventually your 100,000 or 10,000 or 20,000 will become 5,000 or 1,000 or $500. So you don't need that. You always need to have capital in the sidelines, waiting when to take the trade how to take the trade. So that is why I always emphasize on go and do your demo account trading. Learn to take trades and learn to see how the market reacts to you. If you still don't want to use demo account because you think you don't have the feeling, just put in a small amount of money. Don't have to put something which you have to, take out 99% of your bank and put. Maybe just put 1% of it into the trading account just to have a real money feel, and then take small tiny positions, and then try to see when I buy here what happens. Let's say you go to forex, you say I want to learn how to trade forex. So you think at this point, what should I do? Let's say I sell. So you go to your real life account, you just take a sell position, a very small amount. It will never affect and blow your account in one trade. Just take the position and see. Let's say in a day the market goes in your favor, then study those charts, go to lower time frame, see what happens, where you took the position. Let's say you've taken your position at, let's say, this point. Study back what happened to made it go such a way. Is there any kinds of pattern? Then try to do your back testing. Learn to see that same patterns again and again and again until your confidence build up. Then you can try putting in a bit more money to risk. That is how I personally done it myself, where I saw a specific strategy that I like and I back tested it. I backtested it in multiple time frames, a multiple asset class, and then I saw, okay, it works in this time frame, let me use it. Then you try it. Out of the 10 trades, do it in a way such as this. Take it in a span of, you always look at it at a span of, I'm gonna take, let's say, out of in 1 month or in 3 months, I'm going to take a specific number of trades, and the trades will be going to be taken in the same order. That means if A, B, C happens, then only I'm going to take the trade. So make sure you have those written down so that you will never go away from your goal. And then you always check, okay, did the first trade, what happens? Then you list it down. Second trade, what happens? You list it down. If it is a win or if it's a loss. So you can put something like this. You can say, okay, first trade, I've taken this position based on blah 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 blah, and then you put, okay, this is a win. Second position has to follow the same exact rules. If it did, you follow until to the last. Let's say you say, I can only risk out of these 20 trades or 10 trades, I can only risk maybe $10 per trade or $20 per trade. Then stick with it. Every trade you're only risking $10, for example. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Let's say you think only 13 trades. So you're only risking $130. So if you have a bigger risk side, you can put $100. So you will only risk 1,300 to test whether this strategy is working. So you cannot tweak your strategy mid-hand. You need to start and you need to finish, and then you see from this set of trading, how many wins and how many lose. So you will come up with some kind of accuracy. You will think this strategy is maybe 50 or 60% accurate or 70% accurate, or it's 30% accurate. Then you try and tweak those and do it again until you're very comfortable with your set of rules, and you know that if this happen, I can take the trade and it will go up. This is a probability of maybe 60%. So you can confidently take the trade at a 60% confidence. This is how you build a proper trading plan, not by just looking at the chart or going to Twitter and looking at some trading guru saying that, if this thing cross and this thing cross, you can buy or sell. No, you need to do this thing. This is the most important thing in the market, in trading for for that. So I hope this video really helps you and guides you. I will make more videos on trading psychology, how to look at different points of views, all this in the upcoming video. So if you find this helpful, please like, share and subscribe, and see you in the next video. Thank you so much.